Very happy to be sitting down now with the founder and CEO of Nikola. I'm still trying to work on it, guys, but I'm going to get it right. Trevor Milton and Jeff Ubben, of course, a man you've seen occasionally on CNBC, though not in some time. Chairman of ValueAct, also the portfolio manager of the ValueAct Spring Fund. Guys, thank you both for being with us. Trevor, let's start with the transaction that has brought you to this desk this morning, which is, of course, SPAC, Stephen Gursky's SPAC, Vecto IQ. Does the deal to acquire you guys, essentially, or merge with you. What does this allow your company to do as you pursue, of course, the future in fuel cells and trucks that are going to run on them?
Yeah, so the market around the world never, like as of right now, is probably the most active market around going clean. So fleets around the world are trying to migrate away from the diesels to the clean energy, zero emission trucks. We needed a method to get to the market, to get publicly traded quickly, and that's really what the SPAC was there for. It helped us get to market in less than 6 months, saved us a bunch of time, and we got to bring in a great board member like Steve Gursky into our board. That was really our main goal, is how do we build as many trucks as we can? We'll be sold out for quite a few years, so we needed access to the markets as fast as we could.
And what is it going to allow you to do? Obviously, you've brought in additional capital as well. That's one reason why Jeff's here has been involved with the company for some time. But Pete Schoenfeld, the other name, Fidelity, I believe, as well. What is that additional capital going to allow you guys to do?
So we'll end up with about $1 billion total. So there was about $500 million from the PIPE, another couple $100 million from the SPAC, and then another some more money that came in prior to that as well. That's going to help us build our factory. We break ground on the factory just here in a couple months. We're going to be building about 35 to 50,000 trucks out of that factory.
Where's that factory going to be?
It's in Phoenix, Arizona. So we really just needed to expedite the factory build. Right now, our partner in Europe, Iveco, which is Case New Holland Iveco, we did a joint venture with them just recently for Europe, and they're going to be building our trucks out of Europe, shipping them here until our factory's up and running. So the quicker we could get our factory here going, the better off it is for everybody.
You know, one thing, David, that Trevor and I talked about was to get public early rather than to go public late when you have all this VC money that's marked the stock up, and to let the small guy, the retail investor, participate in the growth of this company in the industry, and also bring discipline to the company, as opposed to having money come in and stay private, which has proven to generate some bad decisions.
A lot of times the highest rate of growth is actually occurs while the companies are private, as opposed to being exposed to the public markets. In this case, Jeff, I would think, though, this has a spark for the retail investor, given their interest right now in plays in terms of energy efficiency, ESG, and everything else. I mean, my sense would be that it can catch on in that way. Is that another reason why you're happy?
I think so. It's the only hydrogen energy company that's pure play listed in the world, right?
Yeah, besides, yeah, exactly. I mean, really, when it comes to automotive related, we're really the only hydrogen, zero emission, battery electric, heavy duty truck manufacturer in the world. So we've, the SPAC had incredible results yesterday. So for me, I was really happy. It's more of a retail play than it is the huge institutions.
Right, as people understand it. And yes, to your point, the SPAC was up significantly on the announcement of the deal. Why are you, I mean, you know, it's funny, you and I have talked about ESG. You were early, of course, with the Spring Fund and sort of seeing the ability there to gather assets, I would guess, around a new investment focus, Jeff. And you mentioned this company to me almost a year ago when we sat down, very briefly. But what is it about this company that attracts you and ValueAct? I
mean, the Spring Fund, we're about additionality. And when you're dealing with public companies, your additionality is to change the corporate strategy and trajectory of the company and reallocate capital to cleaner, healthier solutions. With the private companies, our additionality is capital, primary capital, to grow, but also partnering with mission-driven, brilliant CEOs that have a clean piece of paper, they're uncompromised, and can run to the goal, basically.
You characterize the company as a merchant energy storage company with de-risking offtake. What does that even mean?
Well, if you think about a lot of, even the storage business today is you get a PPA with the utility or maybe a commercial customer, and it's an asset-driven business that generates a fairly low return, 7, 8, 9%, we know, because it's contracted. In this particular case, Trevor solved the chicken and the egg. And so storage is the threshold technology, and storage is where the value is going to be created, because you can take intermittent energy from the grid when it's free put it into a hydrogen tank and then sell it in the middle of the night to a truck. So that's the margin in this business is the fuel, but he's de-risked it because he has an offtake in a way, which is his trucks on order.
The fact that he knows he's got a user of that energy.
Right, so we've got this uncapped return, but he's de-risked it because of the business model that he came up with.
So what was the key advance here that you feel you've made? I would assume it has to do with the fuel cells themselves.
No, it's actually the chicken and the egg. It's very similar to Amazon. The reason why Amazon's been so successful around the world is that they cover not just the goods sold online. I mean, anyone can do that, but it's the entire logistics behind it, the vertical integration. It's very similar to what Nikola's done. What we've done is we don't just sell a truck. We're really a tech energy company is what we are. We actually sell all the energy for the truck to the consumer at the same time. So these hydrogen stations are expensive to build. But if you match them up to truck orders, then you're only dedicating around $30,000 per truck to a station. So that's nothing. BP, when BP or Shell, when you sell a truck, they get about somewhere right around about $1 million in revenue, in oil revenues, every truck that you ever sell in diesel. So what we did is we took that money, we brought it into Nikola now. So we sell the truck, we're an energy as a provider kind of solution. And that's really the difference is very similar to Amazon is we've got the whole ecosystem rather than just selling a truck.
So you're going to be working, I would assume, though, on long-haul fleets at first. That would seem to make the most sense, wouldn't it, in terms of where you're going to put these things and how you're going to twin it with the trucks and the companies that operate them?
Yeah, so that's probably one last thing that's really unique about Nikola is we're the only company in the world that offers both battery electric trucks and hydrogen electric trucks. So battery electric trucks work really good up to 300 miles. They're awesome. They're cheap to run. They're way cheaper than diesel, and they're even cheaper than hydrogen in some cases. Then hydrogen above 300 miles, when you're moving freight, it's the only way to go because it's cheaper to run than battery because you don't have all the weight of the batteries where you're losing payload. So Nikola is the only company that offers both, and that's really what sets us apart is we offer both battery electric and hydrogen electric, and then we do the grid buffering, so we help the grids buffer their grids. And that's how we get our energy so cheap to be able to broker back to the fleets.
So when are we going to be seeing your trucks on the road fueling at your stations?
So we've got the largest hydrogen station in the Western world already operational in Phoenix, Arizona. That was like our big test facility to show it all works. We're rolling out 5 stations, kicking off 5 stations this year right now. And next year you'll see our trucks coming off the assembly line, first to second quarter. That's why we went public. We decided, okay, we got to get to the capital markets. And the stations will be built and filling next year as well. So we're less than 12 months out.
You've got a lot of partnerships as well, don't you, Trevor? I mean, I see here you've got a partnership with Bosch for your vehicle battery systems and fuel cells, and Meritor on suspensions, Wabco on brakes, thermal. You've got, I mean, a lot of partners. So how much of the intellectual property is actually yours and not theirs?
So this is something that we took a way different approach than Tesla. Tesla, by the way, has done an incredible job. They've gathered the whole world to follow behind them, and that's kind of what Nikola has done around the trucking world. We have the same type of following of people that just love us. It really is a retail play. But what Tesla's done is they've done everything in-house themselves. Nikola has decided a different approach, primarily because I didn't have tens of billions of dollars to go throw at doing everything myself. So what we did is we went out to the biggest players in the world, the people that have access to tens of billions of dollars, and we said, look, this is what we need. It doesn't exist. We'll share the IP with you if you'll help us build it. And we went to Bosch, we went to Meritor, we went to Wabco, we went to Nell, we went to all these different groups. And we said, let's build all this stuff. And lucky enough, when we first started, it was still kind of a science project back in 2015, 2016, when people didn't believe zero emission would work. So all these people jumped in and said, yeah, we want to promote zero emission, but we don't know if it'll work. So we were able to gain access to all the intellectual property across the board on all that. If you were to do that today, no one would ever sign up for that because they know now the technology works. So that's really what sets us apart is we have a piece of all the IP, and we have the biggest suppliers in the world paying for our research and development, so we don't have to go spend tens of billions of dollars.
But the diesel guys are late. I mean, they're way behind, especially with how fast we're starting to price carbon and emissions regulation. And so Trevor is way ahead with the first zero emission 100% zero emission hydrogen fuel cell 100% electric drivetrain core, which can work on large trucks and small trucks.
Right.
That's a big head start.
But you're splitting your IP with some of these very large companies. Conceivably, you have to be the leader, I would think, because at some point, if somebody else wants to come along, the technology may be available to them.
Yeah, look, we're really an energy, like I said, we're an energy technology company. Think of it that. A lot of people say, wow, you build these beautiful trucks. It is true. We have the most beautiful advanced semi-trucks the world's ever built in history. But we're an energy technology company. And why is that important? It's because as you scale up, these people will dump billions of dollars into trucking. We didn't want to just be selling a product where someone could come in and build it cheaper. Our moat, or our essentially what sets us apart from everyone, is we're setting up the largest hydrogen network in the world, 700 stations. Every truck that is sold by our competitors will fill at our stations. That's what's important. I hope everyone sells hydrogen trucks. I hope everyone competes, and I hope everyone builds trucks cheaper than we do.
So the first mover is we're amortizing the cost of building the network with the trucks on order. And then once we've built these stations, it'll be interesting to see if there's an overbuild at all. The first mover advantage is we have the hydrogen infrastructure. So that's different than just selling trucks.
What do you view? I mean, you're a long-term investor, having known you for many years. So how long do you expect the Spring Fund to be involved with Nikola? What do you see in terms of the gestation period here, in terms of getting to free cash flow positive, and when you would potentially exit an investment like this?
I mean, this is a $100 billion company.
$100 billion
company because it's solving the biggest problem, which is decarbonizing transport fuel. That's the biggest problem. Honestly, that's the hardest thing to do. So the next $100 billion company is going to be this. It's going to be a capital-intensive energy company that solves the biggest problem. It's not going to be DoorDash or Snowflake.
Right, but it's a capital-intensive company, which means it needs to consume a lot of capital to actually reach that kind of valuation.
Right.
Is it going to be there?
Well, we just did a pretty good deal yesterday.
Look, one thing I think that's interesting is people look at the amount, how much these hydrogen stations cost to build. It's unique with Nikola because we don't build them until the truck route is sold. So Anheuser-Busch placed a large order, $800 million order with Nikola. We're about ready to announce some orders many times bigger than that. So what that means is that we'll take a route, they'll put 100 trucks on it, and we'll go build the hydrogen station for those 100 trucks, and that's paid for by those 100 trucks. So even though it's capital intensive, instead of giving $1 million to oil companies, that $1 million comes to us. We sign a lease for $1 a mile, 1 million miles, or 700 miles, depends on 700,000 miles, depends on the application. So we get 700,000 to $1 million on every truck we sell. Everyone else in the market only gets the cost of the truck, like 100 grand. That's all they get. Like Daimler, 100 grand. That's all they ever get. We don't. We get $1 million. And that's because we're in energy as a service. We're an energy tech company. So that's really what sets us apart, is we're paying for the infrastructure through the profits that the oil companies used to get. It's a brilliant move. It's like Amazon. Amazon is nothing without their logistics. Amazon is logistics. It's not retail. It's logistics. And that's really what Nikola is. It's a complete ecosystem.
And other applications for these beyond trucks?
Yeah, everything. I believe everything's going to go primarily hydrogen or battery electric. So look, they've absolutely done a phenomenal job building these electric cars that everyone said would never work. The same thought process was in the trucking world. When we came out, everyone said, electric trucks will never work. It's the stupidest thing ever. Well, now they know they do. So as you build these, you're going to have trucks. You're going to have, I think it's going to go into the marine application. It's going to go into the railway. It's going to go into possibly even aviation, because hydrogen is the most energy dense element in the entire atmosphere. You can hold more energy in the element of hydrogen than you can in any other, because it's the smallest atom. It's the smallest molecule, essentially the smallest molecule in the universe. You cannot have something smaller.
Right.
That's why it's so good.
By the way, autonomous, I mean, I would assume at some point these trucks are autonomous or become autonomous or have the ability to do that?
Yeah, absolutely. Look, we don't do autonomous ourselves, but what we do is our truck is actually the very first truck built full level 4 autonomy compliant from the ground up. So we'll work with someone, one of the autonomy players, to put on our truck. Almost all the freight moved in the next 10 years. Well, most of it will be autonomy in 10 years from now.
Well, particularly for these long-haul routes.
Yeah,
right,
absolutely.
It's an 8-minute refuel for a 500-mile haul on a hydrogen system. So you can go across the country on four stops, you know?
Yeah. All right, Jeff, since we've got you here at Post 9, and we've had a somewhat volatile market, I did want to ask you a couple of quick questions. I mean, what do you think? Do you ever think you'd see 0.99 in front of the 10-year?
No. I mean, we're violating the laws, of finance continually.
What does that mean?
I don't know. We have gone to the longest duration asset and priced it as if it's always going to be this way. And it's been going on for 5 or 10 years. So it's kind of the death of value investing to a certain extent, because the world becomes kind of valuation agnostic. And once you kind of lose your connection to intrinsic value, and what is intrinsic value if terminal value is discounted back at 1%, right?
Right.
Once you lose that, though, you kind of, as a value investor with a bunch of baggage, you kind of lose your bearings. So fortunately, I've moved into a world that's got a different lens and a different purpose, and I get to hang out with guys like this that are changing the world.
Right, but when you put your value investor hat back on, I guess you feel as though you're in a world you don't understand.
I mean,
or can't operate in any longer. And by the way, you're not alone in that.
So
I mean, talk
look,
to any of the big value investors, they all feel somewhat dislocated.
I was buying BP yesterday or 2 days ago at $30 a share, 3 times EBITDA. And I'm like, this is ridiculous. It's really hard to get off oil. And the company's done a great job in the last 3 years financially. The balance sheet's fine. They can be part of the solution. They can move to carbon capture and hydrogen and other things with their capital spend to become a company of the future. But I'm sitting there saying, what fundamental, usually I could buy a stock at below intrinsic value and sell it to somebody at intrinsic value, and that's my business. Like, who am I going to sell BP to, really? Is it maybe there's a computer that kicks in and wants to buy oil at some point, but is there really enough people on the other side saying, BP's now 5 times EBITDA, I want to buy it? I mean, I'm not sure.
Well, you bought it though. You must think there's still a chance.
Yeah, I mean, this is my point. I'm just following my true colors, which is intrinsic value, valuation driven.
Yeah.
And I think you can help transform those companies too to clean energy, which is, I think, is what like BP's trying to do. And I think they'll be able to rebrand themselves. And that's why we ultimately went from the SPAC is VTIQ is the symbol on the SPAC. They'll be converted over to Nikola NKLA. And these companies like BP and others have seen it, and they said, look, if we don't change what we're doing right now, we're not going to get that long retail value anymore. Right. So they're changing. These companies
are they changing fast enough? I mean, you run an ESG fund. You were early, and you're buying BP. Granted, they may change over time, but they still take stuff out of the ground and cause an awful lot of carbon to go into the atmosphere as a result.
Yeah, but they are part of the solution. We can't get off oil fast enough to it's brought whole populations out of poverty. It's allowed for globalization, which has created a lot of value, to be honest. So it is in the plumbing, and they have the infrastructure, they have the geologists, they know where the aquifers are, they have the project management, they have the workforce. They can move to the cleaner solution.
So do you ever get to a point where you move them to get there? I mean, I'm somewhat surprised to hear you would. I understand 3 times EBITDA is very alluring for a long-time value investor, but you run an ESG fund.
It's not that different than the core business that I ran for 20 years, which is the stock price creates the impetus for change. And when your stock price gets that low, your existing strategy probably isn't working. And my job as an activist investor in the environmental and social world is to go find them, not to find the new CEO like I did in my old business. That's what we focused on. Do they hit margin metrics, blah, blah, blah. My new activist hat says, let's go find the right investors, right? Let's go, because right now our investors are wrong. They want us to buy back stock, and we're a capital-intensive energy company. Why would we do that? But let's be part of the solution, reallocate our capital, and that's a role that I want to play with a courageous CEO who wants to move and do something different.
Right. And finally, Jeff, just the market itself right now. Does it worry you at all? The equity markets, where we are?
I'm buying. I buy on weeks like this for sure.
Just because long term.
3 times EBITDA.
I know, but you just said there may not be anybody to sell it to.
I know.
Nobody wants to buy these things.
Trevor said it. We need to make it more investable. That's all, and we can.
You can.
Yeah.
Even a even a oil company,
Yes.
a BP, can
Yes.
make it investable.
Yeah,
Yes.
they've got to transform their brand completely, and I think these guys are realizing it. If they don't change everything fundamentally, they're going to die. And I think that's the most important thing. They've got to say, look, everything we're doing is destroying what's going on around the world, and people don't want to invest in this anymore. And if they don't change their brand, if they don't go make those huge pushes into hydrogen, electrification, they're done. That's it.
But
They're
when you
out.
trade at cents on the liquidation value, which is essentially, I mean, oil probably has a 40-year life, really, because what we're doing, I mean, we'll have 700 stations on the road by 2030.
Yeah.
That's 10 years away, right?
The crazy thing is, we'll be the largest energy consumer in the world in 7 years. The largest, because of how much energy our hydrogen consumes. So Nikola will have the ability to affect the energy consumption around the world better than almost anyone. That's where people like, look, we don't do anything with BP right now. I mean, they're a great company. There might be something there down the road that we could work on together, and we're trying to push all these oil companies to change. And it's not just them, it's everyone. But we need people to help us. When you're consuming that much energy, you need people that already have infrastructure, have knowledge, have the people, have everything, and we need those people to help us succeed as well.
Yeah, I also may have identified your exit about 7-8 years down the road. Guys, thank you
Thanks for
being
your time.
here. Trevor, thank you, of course. Nikola, NKLA is the new symbol, correct?
It will be in about 2 months after the merger's finalized.
Right.
So it's VTIQ right now.
Yes, VTIQ, soon to become NKLA, again, when the merger is finalized. Jeff Ubben, thank you.
I'm going to shake your hand, but you
No,
won't.
no shaking. What's with the shaking? Guys, thank you.